The stock market just crashed. What is next? All right, brothers, in today's video, I'm going to be going over some data and analytics, as I always do in these videos. And we're going to be diving into, what has happened in the past year. What is my opinion in the stock market? Now, if you like stock market content, I normally post this. We're more of a crypto channel now. But if you want me to go back and make sure I post some stock market information and my thoughts, my opinions on the equities market, make sure to leave a comment down below. Before we dive into this video, please, again, make sure to smash the thumbs up button. Smashing is very imperative. And leave a comment as mentioned before. And if you have not done so already, make sure to subscribe to our YouTube channel. Again, the stock market just had a little bit of a slide. What are my thoughts? Let's dive into this right now. Now, again, if you look right here, a number of NASDAQ stocks down 50% or more is almost at a record. 40% of index firms have fallen by half from one-year highs. So what does this mean? Why is tech crashing? What is going on here? So we look right here, the average stock distance from a 52-week high percentage by a major index. So this kind of points out, what's going on. And if you look right here, you can see a majority of the NASDAQ stocks are hit very hard. Very, very hard. If you look right here, the small caps are also down substantially. So I actually really like a lot of smart caps. I'm going to be coming out with a video here soon of, some of my 3 top favorite small cap penny stocks that I really prefer. So stay tuned for that here soon. But if you look again, NASDAQ stocks just been getting hit, specifically tech stocks. And there's been some, speculation around that as to why. Again, we have high inflation. We have some fear in the markets. They plan on raising rates here soon, about 3 or 4 times. And there's just a lot of uncertainty. So what is my opinion on this? Where is it all heading? So let's first talk about what has happened in the past year. Now, again, most growth stocks, aka small caps, have gotten destroyed. They've gone down, 10, 20, 30, 40, 50%. Meme stocks have gotten, quite destroyed as well. Small caps, as I've just mentioned, destroyed. They've gotten absolutely, look at Planet 13, one of my favorite stocks. I've been accumulating a lot of that stock, by the way. A great buy. Now, and one of the reasons why I really like small caps, too, diving off topic, is if you actually study Warren Buffett, one of the greatest investors of all time. Now, I follow his simple strategy. Again, using time as my best asset, so setting up a Roth IRA and some other things. And again, if you've never heard of this or want to know how to do that, we have videos on that. Make sure to check us out. They're all on our YouTube, so check those out if you have not done that. But if you study Warren Buffett, he actually started as a small cap investor. And actually, the company that he made a large proportion of his fortune on is actually Geico stock. So he took the risk, he invested in an OTC, a small market capitalization stock, and he really struck and did big with that. So that's just some side information. Most mid caps, destroyed. Most super caps, good. And that's just how this market's been recently. If you look at small caps, mid caps, their price to earnings ratio, PE ratios, are actually, a pretty good deal, especially small caps. These super caps, these very large companies, they've been fine. They've been doing fine. Their stocks have been fine. They've been being pumped. But tech and small caps have been just getting hit. So I really think that's personally where the buying opportunity is right now in these markets, based on your perspective and future outlook of things. Again, I know we're also still in a very hyperinflated economy. So now again, the Fed does think they're going to be able to get, not interest rates, but inflation back down to 2 to 3%. I think that's going to be very difficult to do. I really do. But with that being said, we're still in a very high inflationary period right now. And you can't just print 45% of every US dollar in the past 2 years and expect there not to be inflation. I think actually there's going to be even more inflation here coming soon, because when you print that much money and that much M2, that much circulation, it's only a matter of time before that flows into the price of goods and services. And not to mention, we're having a lot of supply chain problems too. So you have a huge amount of printing money. You have people that don't want to work, and then you have them wanting to raise rates in the middle of it. And something to also keep in mind is the Fed puts billions upon billions of dollars in the stock market every month just to keep it afloat. And that's why they're also talking about tapering. They want to taper. They want to stop, putting all this money into the equities market. So that's something to keep in mind also. So the first thing I want to talk about is, if you look, there's been a lot of retail scare. Retail has not been in the markets. They've been getting absolutely shredded again, as I just mentioned, as small and mid caps. Again, inflation at almost a 30, 40-year high. Since 1982, I believe, was the highest ever been since now. 7% was the CPI, so that measures inflation, consumer price index, and that's a very high number. If you think about it, that's pretty much them stealing 7% of 7% of your paycheck. Not only your paycheck, but 7% of your income every year, practically. When they're printing all this money, it's not a good thing for savers. And there's a lot of savers in the middle class and in the poor, obviously. Robert Kiyosaki, the rich invest in assets, savers are losers. And that's something to keep in mind, but also just depends on the point of life at which you're at. Now again, if we have this big crash, which I do think we're going to see a big crash, do I think it's yet? I really don't think it's yet. And I think that's because you can't just print all this money and expect there to be a big crash. It's going to take some time. It really reminds me a lot of the 1920s. If you study the 1920s, it's kind of the same thing. People are just throwing money to the equities market, throwing it, printing. They're throwing money into the equities market. Everything's going up. Now, again, it's very different nowadays, but if you look at a lot of charts, the housing market, that's kind of in a bubble also. It doesn't, take a whole high of an intellect to really, come to that opinion right there or that analyzation. But, at the end of the day, you need to invest your money in an asset until we do have a correction. Then obviously you want to redeploy your money and buy low and sell high to increase your return on investment, the highest probable possibility. So with that in mind, obviously we have high inflation. Now, as I just mentioned, it's 7%, the largest 12-month gain since 1982. So I was right. According to the Labor Department, data released Wednesday, the widely followed inflation rose 5% from November, exceeding forecasts. So what did I say? I think I said 30 to 40 years. So a 39-year high of 7% sets stage for Fed hike. Again, they want to fix rates. They're not going to be able to raise them a substantial amount. It's just not possible with all the money that they're printing. They'd have to pay back a lot of that money. And we're a very high debt nation. I think when we went over a video when we talked about, what is crypto? Why is crypto the future? Obviously, when you've gone through this content, you know that crypto is going to be a very innovative technology, much like investing in Amazon, Facebook, and some of those other investments that are once in a lifetime opportunities. And I think we're going to see one of the biggest transitions of wealth in history, as a matter of fact, in the cryptocurrency space. Number 3, stock market is irrational. So that's also something to keep in mind. There's a lot of irrational opinions, a lot of things going on in the market right now, a lot of fear, a lot of uncertainty. But what is JP Morgan saying? If we're lucky, the Fed can engineer a soft landing. Expect more than 4 rate increases in 2022 and a lot of volatility. Now, what I think is going to play out, I think we're going to have a little bit of volatility in the first half, and then I think after we're going to start seeing some more progression. But don't get me wrong, we are going to see some uncertainty and some pretty crazy volatility, but I do think we're going to level out, and I don't really necessarily think the stock market's done for. Don't get me wrong, though, there is going to be a correction, but do I think it's right now? Not yet. I think it will be, in a year, maybe 2 years. It's really hard to say. You got to watch that money printer. Whenever they're done printing money, that's a key indicator that, maybe I should pull my money out, take my profits, and then wait to redeploy when everything comes crashing and burning down, because as Warren Buffett likes to say, you want to buy when there's blood in the streets. Next thing, Jamie Dimon sees the best economic growth in decades, more than 4 rate hikes this year. So again, he's still very bullish. He thinks there's going to be, some great economic growth. And, I think probably he's not wrong. It really depends on how the Fed pans out and plays, given the current circumstances that we're in right now. This dude says 3 reasons why the S&P 500 is set to rise at least 11% in 2020, according to FundStrat's Tom Lee. Lee expects that the S&P 500 to rally 11% to 5,100 by the end of the year, with big volatility in the first half. Again, like I was saying prior, I think we're going to have some volatility, and then I think towards the end of the year we're going to see more of a little bit of an uptick once some of the fear and uncertainty levels out. The stock market will print another gain in 2022 for the 4th consecutive year, according to FundStrat's Tom Lee. Now, if you look at the Russell 2000, obviously that's taken a hit. Look at this. We were at 2400, and now we're down to 2179. And this was actually a couple days ago. So we're actually way lower than that now, and we're around those numbers, but that's something to keep in mind also. Recap. 2 out of 3 plus of the NASDAQ stocks in a bear market as of yesterday. So 2/3 plus of the NASDAQ stocks in a bear market. Experts expect bad first half of the year. Fed and Jamie Dimon preparing market for 4 or more rate hikes in 2022. Small caps trading cheapest since 2011 on forward PE. Now again, this is why I want to go over some small caps. Small caps make up a vast majority of my Roth IRA and of my portfolio in general. Again, I'm following Warren Buffett's strategy, but small caps and mid caps are the best buying opportunity right now, period. They took a big hit in 2021, and some of these forward PE numbers are outrageously cheap. So shorts are maxed. Holiday sales were booming, and the economy will be fully reopened in 3 to 6 months. That's what they're saying is going to be occurring. That's what they think is going on. So that is the recap. That is the video today. I hope you found value in this. My thoughts, my opinions of what's going on in the equity market. You know, it's really hard to time and say what's going to happen, but I do think we're going to see more inflation coming out. I do think we'll see some tapering, but do I think we're going to have a huge bear market? Not just yet. Do I think it's coming? I think it's right around the corner, so it wouldn't be a bad idea to hold on to some cash on hand or just some liquidity so you can redeploy it. But for the time being, small caps and mid caps are the best buying opportunities possible. That's my thoughts, that's my opinions. I hope you found value in this video. As always, make sure to smash the thumbs up button. Make sure to subscribe to our YouTube channel if you have not done already. So, and leave my opinion. Do you agree or do you disagree with me? Are we going to be heading into a bear market here very soon? Or do you think it's going to be in a 1, 2, or 3 years like I think in my opinion? Leave a comment down below. What are your opinions? And if you want to cop some merch, again, you can always visit us at brotherhoodfinance.com. Or if you want some additional financial education, you can always check that out also, because we have courses and a whole bunch of things provided to set you up with everything you need to succeed and achieve financial freedom. As always, brothers, have a good rest of your day. Have a good rest of your weekend. I appreciate you watching the video if you watched this far. Thank you very much. Peace.